Hello everyone, friends, Mozart here. So, what do we have with Bitcoin at the moment? My first short position at 58,400 was executed. I set it up a couple of days ago. I also wrote about it in the Telegram channel. I am placing a couple of short orders. One has just been executed. The most interesting part is what all of this is based on. So, the employment data in America just came out, and the number of initial unemployment benefit claims is lower than expected. And this means that the American economy is not as weak as it seemed to the market when the ISM Manufacturing Activity Index was released. It came out at 3:30 p.m., just so you understand how much it affects. So here's the candle, exactly at 3:30 p.m. This is the American index. It doesn't matter. But here's Bitcoin, the same thing, at 3:30 p.m. Here's the candle, and there it goes. So, good economic reports have now become a positive for the market, especially after the crash on the Japanese stock exchange, the Korean won, and so on. And what is happening now? Well, the first pending order has been executed. The second one is still active, meaning this is the overall position. I usually place two pending orders on Bitcoin and Ether, 60 to 650, which is the end of the resistance block. So, should we close now, for example, or something else? The situation is, so to speak, ambiguous. In fact, considering two important factors. Which ones? The first and probably most important factor is that there are reports from American news outlets like CNN, New York Times, and Wall Street Journal that Washington seems to have convinced Tehran not to respond to Israel for the killing of their high-ranking official. I don't remember his name. This is the first and most important news. Yes, Hezbollah and Reed said, despite this, we will still respond, but in fact, it remains an internal conflict between Lebanon and Israel. The main thing is that Iran does not respond. It seems to be positive for the markets. And the second piece of positive news for the markets was yesterday. It was the Bank of Japan that convened an emergency meeting and said, okay, guys, calm down, we kind of changed our minds, we won't raise rates as quickly as we previously intended, and for now, let's keep the liquidity in the system the same as it was before, meaning we'll slow down the pace, review things, and so on. This is good news, and as a result, we can see that the Japanese topics also recovered, rebounding quite well, although not completely from this drop. So, Bitcoin is rebounding, crypto as well, plus there will be a meeting soon between Kamala Harris and representatives of the crypto industry, who also have something to propose to her. To their voters, not only Trump wants to be, yes, the crypto king, and Kamala wants to get into this race. Well, and it seems to be not bad. And it seems that we have just barely overshadowed the entire bearish candle of Monday, August 5th, with just a shadow. Not bad. Really, not bad. And there seems to be room for a rebound as well. So, we have this large zone. I also wrote about this on my Telegram channel. By the way, the link to it is under this video. For those who are not following, I recommend subscribing to watch all the episodes and my trades there first. This is a large zone, with support at the bottom end, resistance at the top. I wrote that in the range from here to here. I don't want to do anything because it's a zone of uncertainty. We can move around for a long time and in any direction. So here we are, while the rebound is happening. This is the main resistance zone. Here it is. I have two limit orders here. Basically, considering the current context, the fact that we bounced off the lower boundary again and covered the dumping candle, we can move upwards. In principle, they can somehow push the price up. Around 60, 61, they can. Here we have serious resistance. The 50-day, 100-day, and 200-day moving averages also act as resistance here. I have a stop set on this short position, which means it will fully cover this entire drop. So, here's the situation. Considering that this is basically already absorbed, I will take from the peak of the drop to here, which is almost 50% of this drop. The rebound is not bad. And for the same reason, yesterday I placed an additional long position at 53,610, also with double the volume, while the short position was with the standard single volume. It is possible that this was the bottom, and it won't go lower. Even if Hezbollah and Israel continue to launch rockets at each other, the main thing is that Iran does not join in. In principle, this could be the bottom. However, for now, we are relying on technical analysis. And from a technical perspective, it was quite a significant drop. The indicators went deep. The RSI went down to 25. Whether this will be a reversal on the MACD, I don't know. Additionally, this bump, whether it will turn around or not, I don't know, as it hasn't stopped yet. And in addition, I have a fairly large long position in midterm coins. I have written a lot about this as well. And Total 3 is also bouncing back nicely. Total 3 is bouncing back, and I need this short as a hedge. Hedging longs, first and foremost. That is, if the market stops here and starts to fall, thanks to this short position, my long portfolio won't suffer as much. If it goes up, then the loss, let's say, this short will be hit by the loss, although I will most likely close it earlier if I see any kind of consolidation right here. On the volume, then my portfolio will still recover more strongly than the loss from the short position due to the larger number of longs. So, this is a hedging short for me, and from a technical standpoint, it is generally correct. So, just even going back to test some zone like this, or a throwback upwards, and then testing this zone again, from a technical standpoint, is permissible and not bad. It looks normal. So, this happens quite often. And then, after all, if this was the bottom, we do it like this, through a double bottom, in short, turn around and go to 66 to cover, and then to the next level. But for now, right at this moment, the probability of testing at least this nearest zone again is high. It is high because the straight, strong, the price is below the moving averages, and overall, the volume was also quite large. And moreover, despite all these positive news and factors, if you look at the daily chart, I don't see that Topix has fully recovered 100% of that drop. Even the second wave of the drop from August 1st, which went down by 25%, has recovered about 50 to 60%, although it seemed like everything had rolled back, but not completely yet. Nasdaq, yes, it seems to be bouncing back. Yes, Nasdaq 1530 on. Unemployment data, here you go. The candle is also bouncing back. But again, looking at the daily chart for Nasdaq, it's not really bouncing back that strongly, is it? From the daily chart, although it might seem that things are not so bad anymore, that is, there is still not much strength in the market. I mean the stock market. Bitcoin is bouncing back better than the stock market. But still, Bitcoin is also influenced by the stock market. Therefore, considering the entire context of the situation, a short position is relevant. And the upper limit, that is, at $60,650, is also relevant. This is just the upper boundary of this entire resistance block. Here it is, the red block. We have only touched its lower boundary. So, somewhere around $58,000 approximately. $58,200 is its lower boundary, and the upper boundary is roughly around 61 if you take it to the end. This is the resistance block. As for Bitcoin, everything is relevant here. All the lower points under double volume are relevant, focusing primarily on this one. These will work if Tehran changes its mind and strikes Israel. Most likely, they will also work. But for now, primarily focusing on this one. All these points with double volume. That is, in fact, in volume, this one long is equal to these two shorts. Next, interestingly, the candle looks weakly for Bitcoin. It will be interesting to see if it closes with the same range as it did. Well, somewhere around the end of April, a candle, although it was more of a hammer, here it might be rain. We'll see. It will be interesting. I can't say for now, midweek. That was Bitcoin. Ether looks weaker than Bitcoin, so I don't see much point in analyzing it. So, you can even see that the Ether to Bitcoin pair is dropping significantly. That means Bitcoin is much stronger right now. Much stronger. Ether is dropping. Alts, let's take a look at them too. Alts, Total 3, meaning capitalization, alts without Bitcoin and without Ether. What do we have here? There are many different beautiful levels here. Overall, Total 3 behaves similarly to Bitcoin, the same descending channel, also hit the lower boundary, bouncing back, although not as vigorously as Bitcoin overall in terms of volume. The technicals are also looking good. So right now we have 3 main resistance blocks above. There are actually many of them here. Below there are 2 support levels. Above there are 3 resistance levels. Right now we are testing it at around $550 to $570 billion. The main resistance for me is this, somewhere around $575 to $600 billion, $55 to $600 billion. And the upper, the last one, is 610 to 625, something like that. The main trading density of this entire zone lies right here. So, this is the last resistance. However, this is the daily time frame. Also, by the way, the price is below all the moving averages, went deep down to the yearly level, tested it, and in principle, it can return back to these moving averages. From the weekly time frame, this looks simpler. The main point on the weekly time frame, the main level is right here. That is, here it is, the lower, or rather the middle of this descending orange global channel, and here is the mark of $590 billion. This is the main gap, the main spike is here, and it is actually key. That's why I say that this zone is more important to me out of all 3 because this one is weaker. This one is also weaker. This is the main one. Here we have the 3-month pivot, the center of the channel, and everything seems to be here. That is $590 billion. If the altcoin closes, preferably on a weekly basis, above the 590 mark, it would be better if it closes above the 620 mark, but at least 590. Then there will be enough grounds to assume that it's over. That was the end. And we are observing the next wave of growth, which in terms of market cap could potentially reach the height of the flagpole from the breakout point. There won't be much more in terms of market cap here, but overall, if the previous high was at $790 billion, this one will be looking at 820. Nevertheless, it will be able to test the previous global white channel. Until it holds above the $590 billion mark, we need to be prepared for the possibility that altcoins might return at least to this level of support, which is around $520-$535-$540 billion, and in a worse scenario, even lower, to $460 to $480 billion. Nevertheless, I still firmly stick to my medium term to long-term forecast for altcoins, as I believe that their potential for growth and innovation in the cryptocurrency market remains strong and promising. That's why I removed some of the stop orders where I received a margin call. But I talked about this 2 videos ago, during that dip on Monday. The portfolio is recovering quite well on this rebound. In principle, it has returned to the values before Monday, before that drop, and that's good. Something was bought. Something was bought. Positions with a pullback that I gave were also bought. Ether was bought. Growth was bought. Well, a lot of things. At good prices. And I stick to my midterm plan. The high hasn't been set yet anyway, and we will see this high in the future. Yes, it's difficult, painful, but I am holding my positions. Added more margin. This was the last edition. I already mentioned this. I won't add more. And what is happening now? For my own safety, I am hedging with shorts on Bitcoin and Ethereum on the 2 main base assets. That's it. So that in case of a negative outcome, the drawdown won't be as deep. And in case of a positive outcome, the portfolio will still go into profit, just not as much due to the short position on Bitcoin. And I might add to my position on Ethereum later as well. That's it. It makes sense. If you don't have any long positions right now, you've been liquidated, everything is bad, and so on, should you take a short position now. But overall, from a technical standpoint, this is a good zone for short. That is, around 58 to 400, 60-60-50. What I shared in the Telegram channel. It's good, but understand that this is all a global sideways market. Yes, it is descending, but it's a sideways market, and in a sideways market, trends tend to break quite often. Trends break quite often, and if we look purely at the technicals, purely at the trend scenario, this trend even on the daily chart goes like this: 1, 2, 3. here, and the turning point is right here. And here we didn't break it. That is, we poked around the $50,000 mark, but didn't break it. And if we are working purely on technicals, purely on trading, without tying it to medium-term portfolios or news, just looking at the chart, then you cannot short in an uptrend. Here, on the contrary, it was a good point to buy back overall, considering that this is one wave. Although according to the indicators, it didn't drop far enough for a long position, simply because the sideways movement is very wide and long. Therefore, if you don't have any medium-term positions, I would probably consider a short at the current levels. I would probably short somewhere below $61,000. I would think about it here. Below 61 is possible, with the same stop, 66. And additionally, I would place a limit order right here, which I set at 53,610 with a stop here or behind this candle or these lows, with a trigger stop on the daily close below them. This would be the best option if you don't have medium-term longs and have nothing to protect. Alternatively, as I also wrote in the Telegram channel, we wait for a breakout above 66, a test, and then move to a new high. Here, long. These are the two main scenarios if you don't have a large long position in investments, for example. If you do, I recommend sticking to what I am doing, current positions plus adding more, with a stop here. That's the layout. But overall, considering Washington's work with Iran and the changes in the Bank of Japan's rhetoric, everything seems not as bad as it looked on Monday. So, events change daily, and it seems that the American economy is not sliding into a recession as quickly, judging by the current unemployment data. Therefore, in principle, the probability that this was the bottom exists. That's all. I will continue as events unfold. Thank you all. This was Mozart. Goodbye, everyone.